Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend Mario Ineko from the Mineko64 YouTube channel. Mario, thank you so much for joining us today.
You're welcome, Elijah, and nice to be speaking with you again.
It's great to have you. And what I wanted to first discuss is the European sovereign debt crisis. It seems like, we're hearing more about this recently, and you're saying actually it's probable that this could really all come together. The European sovereign debt crisis could really happen this summer. So, just within the next couple months. Can you unpack for our viewers how this is going to unfold in your view, and how it might impact first everyone living in Europe?
Yes, we had the sovereign debt crisis originally in Europe in 2011, 2012, with Portugal, Italy, Ireland, Greece, and Spain. They had to be basically bailed out by the central bank with loads of QE. Mario Draghi said, we'll do whatever it takes. So they just kicked the can down the road. At the time, the Greek 10-year yields went up to 40%, Italian 7.5%, the Spanish as well. Portuguese might have gone up into double digits. They put things back. They put a Band-Aid on everything. They printed loads of money, and they promised to do everything. And now, though, with the ECB saying they're going to start raising rates in July, we saw a couple of weeks ago yields in Italy, Greece, and other countries, like in the periphery, so to speak, start rising very sharply. And then the ECB had to come out, some of the ECB officials. They even called an emergency meeting, and they said, we're going to do whatever it takes again as well. To help these other countries, despite the fact that we're supposed to be raising rates. It's a huge mess. So they've calmed things down right now. So it doesn't look like there will be a crisis, but I think there will be. There will be something that will trigger it, in my opinion. I don't know what, but you can't keep things under the carpet, so to speak, for that long, and they didn't fix anything. If anything, the amount of debt that these countries have, their governments, is a lot bigger than in 2011, 2012. And as an aside, I just saw a tweet about one of the too big to fail banks in Europe. It's not in the EU, not part of the Eurozone, it's Credit Suisse. Their credit default swap rates have gone through the roof, which is a bad sign. But with the too big to fail banks, if you have one collapse, a lot of other ones could do the same. And some of the big Italian, French, and German banks are too big to fail. So that could be something to keep an eye on. But it looks for now that they're being able to keep yields under control, but they had to come out because it was getting out of control. The only way I think I can see them stopping it is to start QE again and buy all these bonds, but that would trash the euro in terms of purchasing power. Not that it's not already being trashed by rising prices.
It does seem like we are seeing a downturn in the value of the euro, not to mention as well the increase in prices we're seeing in Europe. I know here in the US, that's what we're seeing as well, the record high inflation. But your take on how the decrease in the value of the euro compared to other currencies is playing into all this?
Yeah, the euro could go and test the 1 level against the dollar. That's relatively low compared to what it was, I think, before the 2007 crisis. The euro got up to as much as 160, I think. But also when the euro was created, I remember it trading below 1 to the dollar. I think the low was around 88 cents or 90 cents. So it wouldn't be out of the realms of possibility. But I think all you're going to see is more and more higher commodity prices, not just in dollars, but in euros as well. And that's what I partly mean by the euro losing a lot of value. I spoke about President Putin. He made a speech last week, and he called the Western currencies like a mythical things, that is created unbacked debt, he called it. It's not real things. So I think that's what's going to happen. Maybe the euro won't drop too much. It might drop to 102, 103 against the dollar. I think what's going to happen, though, we're going to see commodities make another leg up, not just for the euro, but for the dollar as well. And that's how they're going to devalue their currencies, because it's very hard to devalue fiat currencies against each other, because the different entities compete. If the euro drops too much, then the Fed will probably try to do something to get the dollar to move down. So it's like a zero-sum game. The only way really for the whole West to devalue is against commodities, I would say.
Now, when it comes to how the euro sovereign debt crisis could impact Americans, what is your take on how the crisis could really flow through the system?
It could affect the financial system very badly, because everything is so interconnected these days. You could have American banks that have invested in these government debt markets in Europe. And yes, it could reverberate throughout the world, pretty much like, the Asian crisis in 97, 98. That spread throughout Asia. It could be the same thing with a European sovereign debt crisis. It could spread not just in Europe, but to the US as well.
And you mentioned the decrease in the value of currencies having an impact on commodities, and how you even mentioned, what Putin said about the Western currencies. It seems like all around the world we're having, the currencies are unbacked at the moment. But there has been talk about Russia and possibly other countries backing their currency with gold. And you recently had a video on this, that you think that Putin is actually leading the BRICS nations into a gold standard. Can you expand on that?
Yeah, because with the recent moves by Western countries to sanction Russia and steal their foreign reserves, a lot of countries non-aligned to NATO or the West, they're concerned because they have trillions of reserves in dollars and euros and some British pounds. And it's very dangerous to keep. It's like us keeping too much money in the bank. If there's a bail-in, they'll take that money. And it's the same thing for countries. So last year we saw a lot of countries that usually don't buy gold, like Brazil, bought a lot of gold. They increased their reserves by 60%. And the World Gold Council did a survey of its central bank clients, and 25% of them said that they are going to buy, up from 21% last year. And most of the banks that are central banks that are saying they're going to buy are from, emerging markets. So that's why I think it's possible. And I also think the ruble now, if you think about how it's done and what that peg that they did for a few days, 5,000 rubles per gram, did. The psychology, ever since then, the ruble strengthened a lot. I think ruble is pretty much a commodity-backed currency right now. Russia's running trillions of rubles in budget surplus, so they're not really printing money out of thin air. They're earning it through selling real goods. And I think Rafi Faber did some analysis. Ever since Russia started buying gold, increasing their reserves in 2005 or 6, the growth in their money supply has matched the growth in their gold supply. So they're kind of like de facto pegged to gold. I'd have to research a little bit more, but that's what Rafi Faber from the Endgame Investor looked at.
How would you contrast what we're seeing, for example? I mean, there's a culture in, for example, India, right, for people to purchase precious metals. But in the US, we don't see that. And we actually see the government in some ways, you recently reported on this, discouraging people from purchasing physical precious metals. It doesn't seem like the government here in the US wants to have their citizens own something of real value, of something that is going to be stable throughout time.
Yeah, I mean, it's not even that they discourage, but also that they ignore it. And they're in bed with the financial sector, just like here in the UK. And financial advisors, pensions, they rarely ever mention gold because they're not really, they don't make that much money. Plus, they don't want people involved in gold either. They want people to be in debt instruments and in the fiat currency. And the tradition in India is pretty ingrained, and I think the World Gold Council is trying to convince Indians to buy digital gold, but I don't think they buy that. For them, it's the real thing, the jewelry that they wear. That's their savings. But yeah, and in terms of discouraging, I guess the price, it's not even, it is kind of suppression, but the volatility and the frustration in gold and silver discourages a lot of people. And I spoke about this in one of my recent videos that when gold became legal again in the US in 1975, WikiLeaks has some documents from 74 where bullion dealers in London were in communication, I think, with the State Department or the Treasury about how to, manage, the fact that Americans were going to be able to buy gold again in January 1st, 75. And one of the things they said is that the gold futures contract on COMEX that started the day before January 1st, 75 was going to help keep the American public away from buying real physical gold. And the other thing the futures contracts do, they create volatility because they let speculators leverage, and gold is supposed to be money, but it's the way they treat it and the way they have a futures contract on it makes it very volatile, and that makes people think that it's risky. I mean, even here in the UK, I talk to friends sometimes, and they ask about gold, and I say, well, I think you should have some. And they always go, oh, but it's very risky, and despite the fact that it's been going up 10% a year for the last 20 years, in most major currencies.
And you've mentioned that gold and silver, the physical metal, is essential really for personal sovereignty, for liberty. And that's really why the government doesn't want us to have it. And it is a threat to the financial system, the fiat currency system, because we can have something kind of an alternative currency in our own possession. We can become our own central bank. Can you explain the importance of that, really having your own physical gold and silver?
Yeah, it's not even just about having it either, but if you were under a gold standard as well, and I think Howard Buffett wrote about that. That's Warren Buffett's dad, who was a congressman from Nebraska back in '48. He wrote an article that's the title was "Gold and Economic Freedom" or "Human Freedom," and he said gold disciplines governments as well when you have a gold standard, because if you think the government is overspending and there's too much debt, you can withdraw your gold from the banking system, and that drives up interest rates and stops the government on, in its tracks from spending. But also, like you said, being outside the system, they can't really track you. What you do with your gold. Maybe they'll track you when you buy it, but you could give it to anyone and nobody will know. When you operate within the banking system, they know everything you do, who you sending your funds to. And I guess one thing I would say, I've never seen someone who's really poor in the streets or who had gold and silver. So it helps keep your, the surplus effort that you've been able to, that you've put through your life and that you've accumulated this wealth from your efforts. And it protects the purchasing power as well. That's what is important, because if you keep paper money, over the years, it's going to buy less and less. And that makes you less self-sufficient, of course.
Now, you've mentioned that what is happening right now is kind of like a modern day gold confiscation, where the government is, and the whole financial system is really discouraging people from investing in gold. Can you share a bit more about this? And then also, do you see a risk of gold confiscation possibly in the future? Like actual, the government taking the gold from people?
What I mean is that I guess it's not really confiscating, but it's stopping people from buying. So it's almost like, not letting you have it. And it's the financial press, the government. There's very little talk about gold. You don't see Joe Biden coming out and saying, yes, we have high inflation. I recommend that all Americans go out and buy gold and silver to protect themselves. No, what they're doing is like sending them, probably trying to spend even more fiat currency to help them. I saw that in Austria, they're giving 500 euros for quite a few people to help fight inflation. So they're fighting inflation with more inflation. And the confiscation, could it happen again? Anything's possible, but I would say that in 1933, people were aware that gold was money, because it was. Nowadays, you've seen Mark Dice maybe on YouTube. He goes around trying to give someone a Snickers bar or an ounce of silver. They take the Snickers bar and, a $20 note or 1 ounce of gold, they take the $20. They don't want the gold. So it's unlikely, but you never know.
It is also important, it seems like, to share with people this information regarding gold and silver and how it does really give personal sovereignty. And it does allow people to become their own central banks, because, as you mentioned, very few people actually understand that.
Yeah, the other thing as well, gold and silver are accepted anywhere in the world. So if you have to flee wherever you live, and go to another part of the world, you can take a few coins or bars, hide it hide it, somehow get it through, and you can start again in another country. So that's why it's important, I think.
And if we do see the BRICS nations move towards some sort of gold standard, as we were talking about earlier in this interview, do you see other countries will be forced to adopt a commodity or gold kind of system? And here in the U.S., for example?
I think eventually, even though right now they're probably trying to fight it as much as possible. And it's concerning, because it looks like they're pushing for war with Russia. And maybe even China, with relationship to, with regards to Taiwan. But if we don't get a war, I think eventually if the BRICS and that part of, the global South, Russia, China, it's a huge chunk of the world population. Unless we go that way as well, we'll be in deep trouble. And we could be in deep trouble, because I don't really rate our policymakers and our leaders to think like the BRICS nations, which is ironic, because I thought the West was better than this, and it seems like the emerging market countries and Russia and China are leading by example, in terms of the economy and monetary affairs.
Now, if people in the US, for example, or in the UK where you are invested in precious metals, the physical metal, do you think that gives them a leg up in the future if we do go into some sort of precious metal backed system?
Oh, of course. And don't forget that if you put quite a bit of your savings in gold and silver, you are your own central bank. So you're already you have your own gold and silver standard yourself. And yes, they will benefit, of course, if the U.S. and the U.K. decide to go on a gold standard, because gold will become, a lot more valuable than it's now.
All right. Well, Mario and Neko, we really appreciate your time today. Before we let you go, did you want to share with the viewers any last thoughts you had and where our viewers can find you online?
Last thoughts. Just keep stacking. I know the gold and silver market have been frustrating the last couple of years with everything going up except gold and silver. But if you look back in the 70s, gold in 74, 75 topped at 200 and then dropped to $100, and it only regained new highs towards the end of 1977. So it can be frustrating. Silver as well took a while, and then all of a sudden they took off. So that's why you need to keep stacking. If you wait until it starts taking off, and it will be very hard to get physical gold and silver. And as for where the viewers can watch me and see what I talk about, is my YouTube channel, Maneko64, and I'm also on Twitter at Maneko64, and I make a video basically every day.
Definitely a great place for a daily analysis of what is happening in the economy and precious metals. Thank you so much for coming on this show, Mario.
You're welcome, and thank you for having me.